Hi there, and welcome to Economic Observations. My name is Chris. Today is February 2nd. This video is brought to you by the Tanzania School Foundation, a nonprofit near and dear to my heart. There are links in the description should you like to learn more. Well, let's get started. Google and Microsoft helped prop up the NASDAQ market today with razor-thin margins. Dow is up 224 points. 4 days in a row now that it's been going up. But I'm going to tell you, it's not a time to buy the dip. There is an article today that says January payrolls report on Friday, and they could be rough, with as many as 400,000 jobs lost by one estimate. Yeah, it says here, judging by the opinions of some Wall Street forecasters, employment either slowed to a crawl or perhaps even turned negative in January. Goldman Sachs estimates 250,000. Citigroup sees an increase of 70,000. It's all over the place. Nobody knows. The unemployment numbers do come out for last week tomorrow, and we get that all awaited job reports on Friday. This week I stated that there was an average of 247,000 jobs lost for 4 consecutive weeks in January, which is roughly 1 million people. Do you really think 1 million jobs were created? They are blaming Omicron, saying that people weren't going out to restaurants or traveling or going to hotels or bars, and that is why the lag. Some people had to leave their jobs or stay home because their children weren't at school. It's all a bunch of hogwash. Jobs were lost. They think, some of these forecasters think, oh, we are in this booming economy. I am doubtful. Now, I am reading a really good book. My son bought me a book, and it is fascinating. It is called The Great Depression. It's a diary by Benjamin Roth, who was an attorney during the Great Depression. And he starts writing in 1931, and it is a fascinating read. Fascinating, I say, because there are so many entries in here that can relate to today. Many think that the stock market crash in October of 1929 triggered the Great Depression. But there were multiple factors that turned it into a decade-long economic catastrophe. I mean, that market didn't bottom out until the summer of 1932. There was no end. But the references and the things that transpired back then are so relatable today. So what caused the Great Depression? And then we'll go into some of these quotes. Overproduction, executive inaction, ill-timed tariffs, and an inexperienced Federal Reserve. It was the worst economic period in U.S. history. It only rebounded when the U.S. started mobilizing for World War II. Industrial production fell 47%, and the GDP declined by 30%. Half of all banks closed. Stock prices were trading at a third of their previous value. Many much worse than a third. And nearly 25% of the entire population was jobless. Wages came crushing down. Hours were cut. The only time people went to stores was when there was a sale, practically giving it away. Lines formed at the banks, and people rushed to get their money out. While the stock market may have seemed to start the Great Depression, it sounds so familiar because the speculative boom of the 1920s, it was called the Roaring Twenties, right? And you can say that we had the Roaring Tens of 2000, right? All the way up to 2019. The jobless rate was 3.7%. And from 1920 to 1929, total wealth in the USA more than doubled. Sound familiar? Individual Americans started investing in the good old stock market. But they didn't invest in fundamentally sound companies. It was all speculation. Sounds familiar again. Consumer debt increased. As we know, credit card debt is over $1 trillion now. And many companies overextended themselves too. Financial institutions became heavily involved in speculation. Weak regulations had opened up speculation. Weak regulations had opened a way for a period of wild speculation in the stock exchange. Being in the market was in, just like it is today. Buy the dip, right? That's what everyone's saying. But many investors weren't researching companies. They weren't buying based on the fundamental value. They were just gambling that the stock would go up. I feel like I'm reliving everything that happened leading up to the market crash. Even worse, many people bought shares on margin. Generally needing just 10% of the stock's price to make a purchase, not realizing they'd be on the hook for the whole amount if the price fell. That in turn inflated prices, with shares selling for more money than justified by the company's actual earnings. I feel like it's 1927 all over again. The stock market stubbornly kept climbing. That is, until October 1929, when it all came tumbling down. It rallied a little bit for a few days, and then it came down again. The system fell back on itself like a house of cards. You ever build a house of cards so tall, and just a slight vibration, or a slight wind, or even someone opening a door can knock the whole house of cards down? And that's what happened. Anyway, we're going to go to Mr. Roth, and he will tell us. Mr. Roth was in Youngstown, Ohio. Big steel company, lots of manufacturing jobs. He was a lawyer, and he is writing this book from his own experience. There was no TV or Jim Cramer back then, but there were newspapers, and they were saying the same thing. Magazines and newspapers were full of articles telling people to buy stocks, real estate at present bargain prices. They say that times are sure to get better and that many big fortunes have been built this way. The trouble is nobody has any money. It says, professional men have been hit hard by the Depression. This is particularly true of doctors and dentists. Their overhead is high and collections are impossible. One doctor smoothed a dollar bill out on his desk the other day and said it was all the money he had taken for a week. Anyway, this book is a good book, and I will share some of the excerpts. I just have to highlight some of this. It is a remarkable document spanning 14 handwritten volumes over 5 decades. It says the problems of the 1920s boom economy and the response was rapid. Within a few months, car registrations fell by almost a quarter from the September figures, as families earning on average just $2,000 a year cut back on their spending. Manufacturers stuck with overstock and expensive overhead. They began to lay off workers. It's funny because one of the things he says too is, and I didn't realize it was so far back, but he said that all small entrepreneurs and business people who owned shops were pretty much decimated when Kroger and A&P came into the area. So 2 big supermarkets came in and it killed so much of the small business. Similar to what has been going on for 100 years, it continues. Anyway, fascinating read. He talks about moratoriums. He talks about food lines. He talks about hours being cut and wages going down, and everything is at a standstill because nobody has money. He talks about the banks closing. Every entry, he mentions more banks that are closing. 1931, June 5th. For the first time in my personal business life, I am witnessing a major financial crisis. I am anxious to learn the lessons of this depression. To the man past middle life, it spells tragedy and disaster. But to those of us in the middle 30s, it may be a great school of experience, out of which some worthwhile lesson will be salvaged. With this thought in mind, I am going to write down brief accounts of developments as they occur from time to time. Debt is not your friend, okay? You don't want to refinance that house or take that equity line of credit. There are so many warnings that it can happen again. And is the Fed going to print? Is the Fed going to print more money and keep interest rates at this all-time low? They were issuing bonds to feed people. To feed people. There was unrest and protests. There was danger in the streets, and it wasn't safe to walk after night. There were tough times. This diary is fascinating, and I will continue going over it throughout. And it's about farmers, World War I, overproduction, giving things away and losing it all. They said that a bushel of apples was 45 cents, and many of them just rotted on the ground while people were starving. They didn't want to give it away. Farms, wheat, corn prices. They even have a real estate, a house. 1915, some street in Youngstown, Ohio. Do you know I went on Zillow and I looked at it? The house was bought for $11,000. And in 1930, it was selling for $45,000 to anyone who would take over the mortgage. That's all that was left on the mortgage. I looked up that house. That house is still standing. And it only has a value of like $12,000 today, so Youngstown hasn't recovered. Anyway, I just wanted to point out the similarities. There are so many similarities, and sure, we have the Fed now, and we have some monetary policy that can prevent that from happening, but can it? Do you think this can happen again? The book is fascinating, and I'm going to keep sharing with you some of the things that transpired, some of the prices of stocks. Anyway, this video is long enough. I'm sure you had enough of me. Thank you for making it this far. As always, I appreciate you. Have a wonderful evening, and we'll talk again real soon. If you haven't liked this video or subscribed to this channel, I would appreciate it if you can.